All right, traders, welcome to today's end of day recap. This is Christian Promhertz, and it is Thursday, the 27th. So, the second big day of a reversal. I think Bloomberg had the headline, which I tweeted out, that the S&P erases 2.8% drop to biggest reversal since 2010. So what a difference again from the morning to the afternoon. The big story this morning, I thought, was that there was really no follow through from yesterday's big rally in the U.S. There was really no follow through at all in not Japan. Japan actually was the one that was up. But the Hang Seng, China basically did not have any follow through, and the European stocks really took it on the chin this morning. Look at what happened to the DAX, down 2.3%, 2.4%. We'll round there. You can see a little bit of a bounce at the end of the day, but this area is really getting hit pretty hard. So let's just look at the chart of the DAX, and then we'll talk about what I'm sure that everybody wants to get to is what happened in the U.S. But look at the volume, and yeah, I mean look at what is happening with the DAX. It is crumbling right now. 5-year chart shows that there is a little bit of support if Bloomberg will adjust. There we go. Right back here around this 1,000 level. Maybe that's where we're going to go, psychological level. But there is some support. I guess if we look, what is this? Maybe a 3-year chart. Let's just back this up to 3. Actually, you should be able to see it. I know that Bloomberg takes. Yeah, I mean, we're basically right back into here. So maybe just a little bit off of 10,000 is the support for the DAX. So, what does this tell me? And why am I spending a minute or two on it? There's a lot of things going on, right? I mean, there's a lot of things going on globally. I don't particularly like when the U.S. is the only market that is doing really well. So, these moves that we're getting intraday. So my point is that if it looks a little bit too shaky globally, I would like to see Europe catch a bid. I would like to see China catch a bid. And I like to run a more diversified portfolio, not just a handful of areas in the market, but in the U.S. Let alone. So you kind of have to take it for what it is. It is what it is, and I think a couple observations to make. So by the way, we basically stopped right at the bottom of value. So let's go through that, and then I'll go through my my strategy or my kind of key takeaways from this market. But S&P, yeah, I mean, we were retracing a good portion of yesterday. We got all the way basically down here. We retraced about 2/3 of the move. And yeah, I mean, and then there were some buying programs at the end of the day. A lot of stuff happened at the end of the year. So I'm not going to try to put reasonings behind this. I have either Bloomberg or CNBC on all day long, and I'm not trying to give CNBC a hard time, but they're constantly looking for a reason for why this happens. I mean, I think you just go through, I heard 20 times today, tax loss selling. I've never heard in my career on Wall Street so many times where somebody mentions tax loss selling. So, and they're just clinging to that as the reasoning for the move down. That's not it. For me, that's my opinion. Why did the DAX go down? Do you think they're having tax loss selling too? There's just a lot of other, there's a lot of other things going on. There's a lot of institutional money as well as retail money. I mean, the last 2 weeks. I'm rounding a bit, but there was $100 billion of outflows in retail mutual funds, let alone what's going on with the institutions as well. So you can't just tie a nice bow on this and say it's tax loss selling and then let's move on. So my point is with that, Qs did get a little bit higher. If we go to the 1 hour, I'm going to go to the daily chart first as I'm going through these charts and giving you so maybe we're kind of coming back to this last February low. Let's just see on the 1 hour. You're gonna, it's an interesting level. I tweeted these out this morning, but we're right back at the bottom of value for the 1 hour. So that's some key resistance, and we'll see which way we go tomorrow. I'm not going to make any predictions. I do like the MACD crossover here. I think we saw that on the S&P chart. Same thing with the IWM. You're going to find that also finished. That really again had a big late day push that all in the last hour, you could see, but up 42 basis points, Also, an MACD a bullish crossover there. So maybe we can get into value. And then if you analyze name by name, which we could do that a little bit, you're going to see that some names definitely performed better than others. But my bottom line and my point of this is that there is a lot of institutional money being moved around, and I know from experience that it happens at the end of the year. There's just a lot of changes that these portfolio managers do at the end of the year. Some indexing, some non-indexing, and for the time being, if you're a little bit worried about how things globally, as I am, watching what happened with the DAX and what happened with Europe in general, these days are just great day trades. To basically go from one end. You could have been shorting things. If we go to the 5 minute bar on IWM, it looked like IWM, because IWM for me has been kind of leading a little bit. It's one of those things that I always watch, but we were kind of hanging around the low of the range around 12 o'clock, and we took this leg lower. And I guess if you really want to overanalyze, you could see that we got to yesterday's top of value support, and that's where we basically turn around. But there's a heck of a lot of buying and program buying. So you can't, going back to the tax law selling and the algos, right? I mean, I don't think like the algos are not the root cause. The algorithms, for the most part, the majority of algos, and I used to trade with algorithms all the time when I was an institutional trader, they're just a means to get an order executed. The majority of them. There are some that are predatory and high frequency, but the majority of algos that I used to do were to try to facilitate a large institutional order. That's all that they are. I know people like to really go into conspiracy theories. The other thing is, forget about conspiracy theories. Like, when the market goes up, everybody says, um, plunge protection. Who cares about this stuff? The only job I have is to try to make money and to try to spot trends for our trading room. Who cares about, like, everybody's bitter. When the market goes down, people are bitter. When the market is up, if you try to be as neutral as possible, there was money to be made on both sides today. So I love these opportunities. It is a little bit, the intraday volatility is huge. Let's just look at the VIX chart and see how that ended up. But and the other thing that I've been mentioning, if you're a regular listener to my videos, you know that I've been talking about having a big cash balance right now, because you can take advantage of these moves and then you can get out of them at the end of the day. I'll talk about my yesterday I talked about the BABA trade, which I left on a piece of that trade going into today. Workday, I put on a trade in Workday today, and I took several targets in that. I took what I could get at the end of the day, and then I'll leave the last piece on. Low risk, and we'll see what it ends up doing. But yeah, the VIX, kind of crazy. Yesterday was basically just an inside day, believe it or not, for the VIX. So, it did go higher again today in the beginning of the day. And this is what it did towards the end. So we have not taken out the 12/24, the Christmas Eve beginning of the candle, and I think that would be good to watch. We are starting to duck below this yellow line, 5 period moving average, which I think we need to do first. So it's baby steps, but I think that's good to start to see that. VXN, which is the VIX for the Qs, you're not seeing that yet. Again, it's still above. It's still in an uptrend, even though it's kind of feels like it's starting to break down. The other one that I look at is RVX, which is the VIX for the IWM or for the Russell. That also has not broken down. So you just kind of have to sit tight. For adding, so all different time frames, right, that you could be doing trades for. I always look, one of the things that I've been talking about is Apple for a long-term investment, not so much for like a short-term swing trade. Right now I think for swing trading, we just had somebody new join the room, and they were kind of saying the same thing. It's really difficult. It's a difficult environment to swing trade and to hold a lot of positions. overnight. And I just think, tweaking and adjusting your trading plan for what the market is giving us. I mean, I don't know, no one knows how long these intraday moves are going to last, but I want to be able to take advantage of them. And then if we start to, if the VIX changes, you go back to the VIX for a minute. If the VIX changes and goes back to, let's say, an 18 or a 19, then there's a whole different game plan, right, to incorporate if you're a full-time trader, or even if you're a part-time trader. But this, you should be, and again, this video is for information purposes only, no advice or recommendations or anything. But in my opinion, you should be adjusting what you're doing based on how the market conditions are, right? You cannot use the same. And again, that's the nice flexibility that you have as a retail trader. You can change, in one day, you can change what you're doing. So, you could be very, very quick and agile in this market, and change up what you're doing to incorporate how the current market conditions are, right? So you don't have to have a reason. You don't have to predict what we're going to do tomorrow. Listen, it's impossible to predict these market moves. So don't think that you need to do that to make money in this market. You don't. And you don't need to have, a reasoning, or you don't need to know the answer behind every market move. You just need to follow the price action and realize the volatility that's going on right now, and make those adjustments. So let's talk about a couple sectors. GDX and gold. I'll start with gold because we are continuing to see gold and silver call buying. There may be a place in your portfolio. I mean, I have right now, the only thing I have on in this space is ABX, which really hasn't been doing a whole hell of a lot. It's a little bit higher than my cost basis, but not much. But yeah, I mean, they keep coming in and buying gold and silver. Those are pretty consistent. If you want to talk about what they're consistently doing, so they are going out for the most part. These are a little bit longer dated trades. I don't know why Trade Alert is not working, but this was a June trade. So if you're looking for a swing trade, this is June, and then the silver was also July, right? So that's really where we're seeing the majority of the longer dated call positions. I talked about, yesterday's flow was mainly weeklies and next weeks for some of the equity and tech, so kind of Santa Claus rally stuff is what they're buying in equities. But really, gold and silver. Silver had a big move today. It looks like it's headed towards that 200-day moving average. This GDX is really difficult. Two bearish engulfing candles, which I tweeted out this morning. So, if you don't want to play with this one, there's certainly a number of other choices in the gold miners. And my philosophy is, to kind of have a smaller position than normal in these gold miners, because they are also they're normally in a normal market circumstances, they're pretty volatile themselves. But really, that's what we're seeing in terms of option activity. The rest of the stuff is really, we saw some LOGM calls out to February. I played stock in this one today, but it's a lot of really shorter dated stuff. I thought this MPC was interesting if you're looking for an energy play. I don't have every trade in here, but it's basically February and less for some of these trades that we're seeing. And these are mostly the aggressive stuff. But again, there's a lot of two-way flow too. So that's kind of what we're seeing in the option world. But again, I think it makes sense. The options really are not going to tell you if there's these pretty big institutional programs that we see that are coming across that are kind of moving the market. The option flow is really not going to tell you that. So you're going to get swept up if you don't have a good risk system. That's the other thing. Speaking of risk, I talked about how you could have been shorting in the morning and going long later in the afternoon. But you have to be very disciplined when you're doing that. In my opinion, you have to have, personally, what I do when I'm kind of doing both sides of the market is, as soon as I enter into a trade, I'm putting my stop price alert someplace. It's nice, every trading system nowadays has an alert that you can put. So the first thing I'm doing is putting downside alerts so that I know, because I'm not going to get caught. And I think I went over a trade in yesterday's video where I said you gotta, if you're going to be wrong, it's fine to be wrong. You're going to be wrong with this market, but you have to know you do not want to stay wrong, right? Which I know everybody hears that a lot in trading, but it's just how it is right now, and you cannot stay. The people that have more, sorry, I'm making so many judgments, but a lot of these folks that I see on Twitter that are so opinionated, you want to get away from these people as quick as possible. Because these guys will. I saw some guy yesterday who said, "Hey, I may have been wrong for 10 years, but I've been right for the last." He was literally giving himself a high five, saying, "Hey, I may have been wrong for 10 years, but I've been right for the last couple weeks." I'm like, "Oh my God!" So somebody like that, I unfollow, and I do not follow that person. I used to follow this person, and I unfollowed them recently. I was like, really? You're gonna say after 10 years you've been wrong? That now you're patting yourself on the back that you've been right? So generally, I think really being not very opinionated and just kind of going with the flow and going with the price action, I think personally is the best recipe that you could do right now. So I started with the gold miners. Let me go into the video is about 16 minutes long. Let me go into a couple other areas that turned around pretty decently. I saw this earlier, XLB, the materials ETF. This one turned around. This one was trying to go positive about midday, and the market volatility midday was just a little bit too much. But actually, XLB was up there with your top performers. Also, ITA, defense names. They also caught a bid at the end of the huge bid at the end of the day. They finished up 1.5%. The one that I come back to that I kind of like is the software plays. I liked two plays that I'm in is this team. This has been doing very well, and this was actually again went lower than where the where it closed out yesterday, but moving nice, and I own stock in this one. Workday was the other one that I tweeted last night. I looked at about 5 different names this morning to possibly add. I chose to do Workday. It actually hung in there pretty decently. We could see that if I could get to the 5-minute chart here for Workday, but it really never broke down. It had a little bit of issue there with the top of value, but it held in there pretty decently. Another one that I traded a little bit today was Google. I just like the relative strength. It did break down a little bit too when I saw this go below this 200 period moving average, but it retook it really quick. And that one I think has been showing some nice relative strength to it. It's almost back. It's inside value now. It also, I was looking at the 1 hour. I look at these names on multiple time frames. It caught that bottom of value and reversed. So it's got maybe a little bit more to go for the week before it hits resistance. Notice that's where it stopped last week. But if it gets through 1059, the bounce will obviously continue there. And I think good things will happen once that happens. Again, we only have one more day of the week. Tomorrow's Friday. Fridays have not been good. We were talking about that today in the trading room. There's been a number of Fridays that have been horrendous. So again, I think being light, going into tomorrow for me is the best way. I continue to take as many targets as possible. But Amazon was on my radar today. I did not trade this one. Netflix also kind of gave a little bit of a head fake, but this is also trying to get back into value. Just to kind of stick with momentum, look at what Salesforce did today. And again, another one that was, and for a while was lower than yesterday's close and really snapped back nice. VPOC taken out there. So the semis, another name that I'm watching here is Xilinx. And then we'll end the video because I'm just about getting to 20 minutes. Yeah, Xilinx, I'm waiting for Xilinx to retake the 50-day moving average. Another one that was showing good relative strength today was Grub. Yelp saw some call buying today. Yelp held in, just like Grub. Oh, sorry, this is Grub. Yelp, I did not play Yelp, but yeah, it held in pretty nicely and then took off with the rest of the stocks. So we'll end it there. I think that's enough of a conversation. I think it's funny that CNBC said that they were doing a markets in turmoil special. Maybe that the market rallied so fast that they weren't able to kind of change. Maybe they'll change the name. Should be funny. But thanks for watching. Have a great night, everybody. And I hope these videos help a lot. By all means, any questions you have, you could shoot me an email. Or, of course, if you're in the trading room, just reach out to me, send me a private message. But my email is cfromhertz@yahoo.com. Thanks for watching. Have a great night. See you tomorrow.